Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Thursday, the 7th of August, 2025. So, as usual, before we kickstart our Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the gist of our daily dose, which is the intraday technical outlook on the 4 US major dollar pair, the 6 major stock indices, and the 2 key commodities market, which is i.e. gold, XAU/USD, and as well as the West Texas crude oil. Let's have a quick recap what has taken shape in terms of economic news flow, data releases for yesterday, and as well as in today's early Asia session, that means i.e. before the start of our daily dose at 11 a.m. Singapore time, on these various flows and news that have a potential short-term intraday impact on all these broad-based cross-asset classes. So let us start with the US market first yesterday. So yesterday we see a couple of tariff-related news flow that initially tends to be rather negative in nature. So let me share with you what are these tariff news flow over here. Okay, so let's see, the screen is there. Yeah, good, the screen is all right. Okay, so where is it? Yeah, so over here, Trump actually have a kind of a very harsh rhetoric with India regarding about India persistency to actually continues to purchase Russian oil. So Trump actually he jacked up India tariffs from 25% to 50% over Russian oil purchases. So that that's actually a negative news flow in terms of we call it global growth, given the fact that India is one of the top 5 contributor to global economic growth. And also another tariff related news flow over here is more pertaining to US semiconductor products. Okay, let me share with you guys what does it is over here. Okay, let me put it on my screen. Yes, all right. So Trump also announced yesterday that he ISIS 100% semiconductor chip tariff. That means any particular product related to semiconductor, even electronic products like smartphones will potentially face a 100% levy heading into the US market. That means any particular imports pertaining to semiconductor, which chips, smartphones, all this will face a 100% tariff rate. But however, he has a little bit of a carrot given to like big US corporation that decided to set up manufacturing plants to produce their respective gadgets or semiconductor chips. So that's actually also applies to Apple as well. So what I could see over here is that he said he will impose a 100% tariff on semiconductor imports, but would exempt companies moving production back to the United States. So that is actually Apple as well. All right, so Apple has this 100 billion investment plan in onshore, means we call it setting up potential manufacturing plants and research and development facilities, and also that is also inclusive of the 600 billion cumulative commitment of 600 billion by Apple. All right, and that also comes in line with partnership with other US headquarters semiconductor firms like Corning, Applied Materials, and Texas Instrument. So because of this so-called carrot that's being given by Trump, saying that yes, there will be 100% tariffs on semiconductor products as well as that related to smart devices and smartphones. But however, if US corporation decides to actually bring production back to the US, that is by setting up manufacturing plants or research and development facilities, they will actually be facing 0% tariff instead of 100% tariff. So with this two negative tariff news flow, and because of this carrot of Trump giving US-based corporation a chance to avoid this 100% trade tariffs on semiconductor products and smart devices products, US stock market continues to bask in a bullish limelight over here. So what I could see is all the three major US stock indices closed in the green yesterday. So despite that little minor push down at the start of the US session, after that push down that ended at Singapore time, which is 10:30 p.m. Singapore time, all the major US stock indices, the three of them rallied very strongly and closed in the green. And in fact, later I'll share with you the SPX and the Nasdaq 100 is just only a few percentage point away from their fresh all-time high. So the S&P 500 closed 0.7%, the higher beta Nasdaq 100 up by 1.3%. This is also being supported by, later I'll share with you one AI related news flow as well, because Nasdaq 100, the 5 key main component stocks are technology stocks that are building on this AI business model boom. And the Dow Jones Industrial Average, because they do not have much concentration in AI related the component stock does not have any AI related business model, so they actually lag behind with only a marginal gain of 0.18%, and the underperformer is the Russell 2000, down marginally negative 0.2%. So all the three major US stock indices that we cover on a daily basis from a technical analysis perspective, for those who follow my daily dose on a very short-term daily perspective. Initially at the start of Monday, I do highlight that there could be a minor pullback after Monday's short rally. That means on Tuesday, there could be a minor pullback. So after this minor pullbacks ended, very likely we start to see a fresh new bullish uplick or a fresh new bullish impulsive up move for the SPX, the Nasdaq 100, and even the Dow Jones Industrial Average, which is the US Wall Street 30 that I covered. And indeed, price action moved as accordingly, according to our short-term technical intraday analysis. So later I'll share with you what are the key levels, the new key levels to watch on these three major US stock indices that we cover on a daily basis. So now let's move on. Like I share with you why the Nasdaq 100 actually outperformed because of this AI related news. This open AI over here, you know that open AI is the forerunner regarding about this AGI, and we call it a generative AI business model. Is one of the forerunner and the leaders and the cutting edge pioneers in this particular area that is booming, that is leading this rally in the major US stock indices, especially in the Nasdaq 100. So OpenAI right now actually looks at to value itself at a 500 billion, and looking out for a potential employee share sale. Okay, share sale. That means they're actually issuing share to their employee. So based on the sources said and reported by Reuters. So initially, OpenAI, the valuation is being previously it was being valued at 300 billion, and now the valuation has jumped to 500 billion based on a private equity valuation metrics. Bear in mind, OpenAI is not a public listing company, and given this we call it private equity valuation that value it higher by 200 billion, that created a AI boom bust into the public listed stock market in the US, hereby causing that positive feedback loop to the Nasdaq 100 that allowed the Nasdaq 100 to jump up tremendously yesterday in the US session. And bear in mind, the Nasdaq 100, all the top 10 or top 5 key component stocks are based on AI driven business model, either directly or indirectly impacted by that. So if you look at the S&P 500 heat map, we see a deep green in the mega cap technology stocks. Apple managed to outperform among its peers yesterday, up by 5.10%, banking on the news flow that Apple potentially could face 0% tariffs on semiconductor and smart devices heading into US, given that Apple has kind of promised to increase its manufacturing productivities. But who knows, next time will there be an increase in the cost of Apple phones in the US? Potentially could dampen consumer spending for Apple products in the US. That could potentially long-term hurt Apple sales. Yes, but that's for a long-term perspective. But from a short-term to medium-term perspective, we still got to respect this ongoing bullish optimism that is being played out in the US stock market. And we see Nvidia also up by 0.65%. AVGO, another Broadcom, another major US semiconductor stock, is up by 3%. All right, over here. So that's for the US stock market. Now let us focus our attention now to the FX market. So the FX market yesterday, I do mention that do keep a lookout for a potential euro dollar bounce over here. So the euro dollar, if you look at it yesterday, it managed to actually stage that breakout, that bullish breakout. So this was the daily chart of the euro dollar. So yesterday it shaped a bullish breakout right above the 50-day moving average and go up above the 20-day moving average as well, right above the 1.16 level as expected. So it was up by 0.73% over here. All right, so that's for the euro dollar outperformance yesterday. And if you look at the US dollar index, given that the euro is the biggest component in the US dollar index, the US dollar index also continues to trade lower ever since the bearish reversal that is being seen exposed non-farm payroll data on last Friday. So the US dollar index was down by negative 0.5%. The biggest, we call it catalyst, was that strength in the euro that was being seen yesterday, which I mentioned. Okay, so right now, if you look at the from a perspective over here, a one-day rolling performance perspective on the dollar versus against the rest of the other major currency. So if you look at the one-day rolling performance, so the one-day rolling performance over here is the dollar continues to remain lackluster, rather flattish. So what I could see is that at the start of today's Asia session over here, which is 9 a.m. Singapore time, the dollar starts to decline. Then afterwards, it starts to push up and trade sideways again. But the outlier over here is the dollar yen itself over here. So the dollar yen now starts to see a short little push up by 0.2% over here. So the reason why the dollar yen is actually being the outlier, that means the dollar is kind of bouncing against the yen, rather not showing any strength against the other major currency, is due to a domestic related situation because of a political uncertainty surrounding the current PM Ishaba. So Japan PM Ishaba could face a key test on Friday in a bid to stay in power. So because we know that Prime Minister, the current Japanese Prime Minister Ishaba, he faces criticism and pressure to resign from within his own party after a poor showing results from his LDP party in the upper house election about 2.5 weeks ago. So tomorrow, his party, which is the LDP party, the Liberal Democratic Party, will hold a joint plenary meeting and an LDP committee reviewing the election result and may be key indicators on how long Ishaba can hold on to power. All right, so there's actually kind of a key party meeting tomorrow, and based on this key party meeting tomorrow, maybe Ishaba is continue to face further pressure within his own party members to force him to actually resign. So because of this looming we call it a party meeting where Ishaba faith is kind of uncertain right now, that causes the yen to weaken, and that's why the dollar yen is actually shaping a kind of an intraday bounce that is a kind of an outlier against the other major currency. Yes, despite this intraday bounce, you see this up by 0.2%, but it's still holding below that short-term pivotal resistance which I highlighted yesterday. So later I'll share you guys what are the key levels and the trend bias for the dollar yen for today's intraday movement session. Okay, so if you look at the current state of the Asia Pacific benchmark stock indices over here, so still recall that before we jump into that picture, let's take a look at how the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures perform right now as we are speaking. So we know that the E-mini futures are trading like a 23 hours basis. That means despite the US stock market close, the S&P E-mini futures is trading right now as we are speaking. So they're actually going to extend their gain that is being seen on the US session yesterday. So the S&P 500 E-mini continue to shape a strong bounce at the start of today's Asia session at 6 a.m. going to trade in a series of higher high, higher low, and now up by 0.26%. Very similar gain as well that has been seen on the Nasdaq 100 E-mini futures, continues to extend its bullish tone from yesterday's US session, up by 0.3% as we are speaking right now. And one thing to take note over here is that despite the fact of that political uncertainty in Japanese, we call it a home ground, the Nikkei 225 continues to remain rather strong. So the Nikkei 225 right now is up by 0.78% or up by 0.8%, staging that new bullish impulsive up move as intended, which I explained to you guys in my daily dose since the start of late last week. All right, over here. And the Hang Seng almost flattish over here. The Hang Seng kind of flat, now up marginally at 0.12% over here. And going down to the other Asia Pacific region over here, we see the Kospi is up by 0.51%, which is the South Korea benchmark stock index. The Thai X is actually up by 2.3% as well. And the Singapore STI is now inching back up to retest its fresh all-time high, up by 0.67%. Ahead of the National Day celebration. So one of the reasons why the STI continues to remain strong today is we do have 3 component STI stocks reporting their earnings before the start of the Singapore stock market trading session. So we have very 2 strong share price performance. One from Yang Zijiang, which is a component stock of the STI. So Yang Zijiang Shipping soared 11% at the start of the Singapore's stock market trading session, posting record high net profit. DBS also, if not on DBS is the biggest component stock in the STI. They're actually up, but its share price hit a record high after Q2 profit beats forecast on strong wealth and trading income. But however, another local bank, Singapore bank, which is United Overseas Bank (UOB), actually inched down by 2% after its Q2 net profit has been lowered. That means, i.e., it actually does not meet market expectation. So net overall, despite UOB profit miss, but we have the other 2 big component stock on the Singapore stock market, which is the Straits Times Index. Yang Zijiang up by 11%, soaring intraday 11%, and DBS hitting a new fresh all-time high. That causes the STI to continue to bask in a limelight over here. So later, I'll share with you guys the Singapore 30 CFD index, which we offered in our platform. What is the technical outlook like from a medium-term perspective when I cover the second segment of today's daily dose over here. And another segment I'll share with you, another instrument I'll share with you guys over here will be Gold XAU/USD. So we know that Gold XAU/USD still continues to be in a rather choppy over here. Okay, let me share up. Let me open up the gold chart. So, okay, where is the gold chart? Okay, let me open up the gold chart for you guys. Okay, this is gold. Okay, so we know that gold continues to trade in a very tight range configuration ever since that recovery that has taken shape on Friday. So in the past 4 days, as we are speaking right now, Monday to today, notice that the price action of gold is in a very tight sideways range configuration. So this tight sideways range configuration starts to consolidate after this very strong bullish Marubozu candlestick that was printed on last Friday. And interestingly, the consolidation managed to take place right above the 20-day and the 50-day moving average. So I could see gold right now over here is that it continues to print a series of higher medium-term swing low. This low higher than this low, which is this low that was printed on 31st of July, higher than the low of 30th of June, and higher than the 30th of June low, higher than the low of 15th of May. So these are medium-term swing low. All right, so gold continues to trade in a higher medium-term swing low, but it can't break above a similar range support over here that has been in place since 22nd of April all-time high. So it's more like a consolidation within this very medium-term 3-month plus of range configuration. And given this very tight configuration, that tight consolidation that we see in the last 4 days or the last 3 days, including today, which is the 4th day, very likely gold may be doing a very short-term minor volatility squeeze consolidation, and potentially we may see a bullish breakout, but this bullish breakout may only take it up back towards 3,435, maximum 3,500 level, which is a fresh all-time high, given that it's still being stuck in this 3-month plus of sideways range configuration since the all-time high of 22nd of April. So later I'll share with you what are the short-term key levels to watch for gold itself. All right, so don't forget, gold price itself is also being benefited right now, also due to the lackluster soft dollar strength that is being portrayed in the market, right? Dollar yen is the exception over here. Okay, the other thing is we talk about West Texas crude oil. So West Texas crude oil, initially yesterday we are looking for a bounce. Yes, the bounce took shape. All right, so there was actually a intraday bounce over here. All right, intraday bounce during the start of the US session, bounce towards the 20 and the 50-day moving average at around the 67.35 level. That was our first resistance level. So initially we're looking at a bounce to 67.36. Then thereafter, before retesting this sideways range configuration upper boundary that is in place since 25th of June 2025 low. So it's been trading in this sideways range configuration. Then thereafter, after the US session kicks way, it managed to do a horrendous plunge and broke below the sideways range configuration support level and ended the US session in the red by down negative 1.4%. And right now during Asia session is trying to stage a bounce. All right, it's up by 111% over here. So later, what causes this sell-off in this West Texas crude oil yesterday is because of this news flow stating that there could be potential chance that Russia right now should potentially throw in the towel, and it could actually potentially see some progress ending the 3-year plus long of this Russian-Ukraine war conflict over here. So with the potential end of this Russian-Ukraine war conflict bringing into the forefront, that means there's some positive development taking shape that potentially could see Russia oil coming back into the global oil market again, as Russia now potentially may face lesser sanction on its oil exports over here. So that potentially causes oil price to tumble yesterday, right? Given the fact that OPEC Plus members also doing production hike, and if Russia were to potentially offer some carrot to end this Russia-Ukraine war, Russia oil products could actually be more Russia oil products could be officially come into the oil market that potentially further increase global oil supply and push down oil prices. So that causes oil prices to plummet yesterday itself over here. All right, so that covers the first segment of the daily dose for today. Now let us now move on to the second segment, which is the intraday technical outlook on all those broad-based cross asset classes. So before we start that, let me expand my screen over here. All right, so let us start with the FX market. All right, starting with the euro dollar. Okay, push it up here. Okay, so the euro dollar yesterday managed to hit our resistance level at 116.40, clearing above 116 figure level over here. Okay, so this level has already been met. Okay, so what we could see right now is that the RSI has already hit the overbought level, and right now what the hourly RSI is shaping is that exit from the overbought level, kind of working out that rally that is being seen yesterday. So given that pullback of the RSI from its overbought level right now, potentially there could be a minor pullback taking shape at the start of the European session to work out yesterday's strong bullish breakout of that 116 figure level. All right, so with that, potentially there could be a dip taking into place on the euro dollar as it work out its overbought condition on the hourly RSI. So first support level to watch over here will be the 20-day moving average, now acting as a first support level, which is at this 116.30 level. So I'll be using a adjusted pivotal support upwards towards 115.90, which is also very close to the 50-day moving average, and yesterday's bullish breakout level now turns into a critical pullback support level. So as long as this minor dip didn't dip below 115.19, so first support level to watch 116.20, key support will be 115.90, because I don't want to tighten it to be so tight at 116.30, given that this is only the 20-day moving average. However, 115.90 confluence with two key technical elements. One is the very clear range resistance breakout now turns into a pullback support, and also overlay it with the 50-day moving average, so giving it much more importance over the 116.30 level. So as long as this minor pullback didn't surpass below this tightened short-term pivotal support I have for today on the euro dollar 115.90, I will still continue to maintain that bullish bias after this potential pullback has already played out, to actually seek out the next intermediate resistance zone at 116.18, 117.05 level, which is the 0.764 Fibo extension from the low of 1st of August as well, and above 117.05 potentially visits 1770, 117.90, which is the minor swing high of 24th of July, the minor swing high area of 28th of June, and close to this pullback line here of the former medium-term ascending channel support from the low of 13th of May, now turns to the pullback resistance area over here, and also confluence with the 1.236 Fibo extension from this ongoing rally that has been taking shape since 1st of August low. Only a bearish breakdown and an hourly close below 115.90, pardon me, that would invalidate today's intraday bullish bias on the euro dollar, to see a further to expose a further extension of the minor corrective pullback to revisit 115.20. Right, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar is also a very interesting pair to watch for today. Why? Because later we have the all-important Bank of England monetary policy meeting. So I'll cover more about that when I cover the third segment of today's daily dose. So it also continued to rally up as expected, almost hit our first resistance zone at 133.80/134.10. Still notice that the sterling dollar is still trading below the 20-day and the 50-day moving average, whereas the euro dollar has really surpassed both these 20 and 50-day moving average. So indicating that the sterling dollar is still underperformed, the sterling is still underperforming the euro in some sense. All right. So given that it hasn't broke above the 134.10 level, which is the 20-day moving average, I do not want to tighten. I don't want to tighten my short-term pivotal support to be so tight. So I'll shift it slightly higher to take into account of this choose yesterday's swing low, or yesterday low at the start of the European Thursday low at the start of the European session at 132.60. So right now the RSI also has now starts to exit from the overbought level as well. So potentially there could be some form of a minor pullback taking shape, given that this today is also a risk event for the sterling dollar. I don't want to tighten the pivotal support to be so tight at the first support level at 133.15, which is the minor range resistance breakout, now turns into a pullback support level at 133.15. So using 132.60 just in case of any whipsaw. So 132.60, as long as I manage to hold any pullback for today on the sterling dollar, after then I will still continues to maintain my bullish bias after this pullback is over. 132.60 short-term pivotal support above 133, above 134.10, seek out the next intermediate resistance at 133.445. Okay, 134.45, pardon me. Seek out the next resistance at 134.45, which is the minor swing high area of 28th of July. And if we do the Fibo extension, given the ongoing impulsive up move since 1st of August, we push it up here, that also constitute very closely to the 1.382 Fibo extension. All right. However, if price action starts to break down below 132.60, then today's intraday bullish bias will be invalidated to see the extension of that corrective decline to revisit 132.10, a breakdown below 132.10, potentially retest the key minor swing low area on last Friday at 131.70, 131.40. So that's for the sterling dollar, still maintaining a potential bullish bias for today, given the fact that there could be a minor pullback first before a new bullish up leg arises, using a adjusted short-term pivotal support at 132.60 on the sterling dollar. Next up will be the Asia Pacific currency over here. Okay, where is it? Yeah, Asia Pacific currency, starting with the Aussie dollar. All right, so the Aussie dollar continues to bounce very strongly over here. So now surpassing our first resistance level at 65 figure level, over at 65 figure level. So with this surpass of this 65 figure level, I would now tighten my short-term pivotal support level to this minor range configuration that was previously stuck since Monday, and it managed to stage a bullish breakout yesterday, very clear bullish breakout yesterday or Wednesday. So this will be my critical level to watch for today to maintain that bullish momentum. All right, so let me push it up here. So this will be 64.80. All right, 64.80. Okay, using a Titan short-term. Okay, so this level has really been taken out. Okay, so using a very short Titan short-term pivotal support at 64.80 on the Aussie dollar, we will now continue to maintain a intraday bullish bias on the Aussie dollar. Next resistance level to watch will be 65.40, pardon me, 65.50 level next over here, and above it potentially seek out 65.80, which is the minor congestion area of 24th of July and 28th of July. However, if price action starts to break down below 64.80, today bullish bias will be kind of negated to revisit Tuesday minor swing low area at 64.50. A breakdown below 64.50 may see a further extension to the downside to retest the critical minor swing low area of last Friday at 64.20. So i.e. still maintaining our bullish bias on the Aussie dollar using a Titan short-term pivotal support at 64.80 for today. Now, next up will be the out layer, which is the dollar yen. So the dollar yen continue to bounce in today's Asia session, up by 0.14%, where the yen actually weakened on the intraday basis due to that political uncertainty surrounding the fate of the incumbent Japanese PM Ishaba, which I covered earlier on. But however, this bounce still couldn't surpass the 20-day moving average and our first resistance at 148.15 level. So given that it's going to be a potential, we call it interest volatile movement for tomorrow, due to that political news flow could be much more volatile than the news flow for economic data. So I do not want to tighten my pivotal resistance to be so tight at 148.15. So I'll still maintaining it at 148.75, which is a very clear key minor congestion area previously from 29th of July and 31st of July. And if you do the Fibo retracement of that last impulsive intraday sell-off from 1st of August, last Friday high, all the way down to this Tuesday Asia session low, that constitute the 50% Fibo retracement. All right, so still using 148.75 as my short-term pivotal resistance, maintain my bearish bias in any case of any bounce. That means, i.e., maintaining a bearish bias. That means using the bounce to fit the strength, put it away indirectly. Still looking out for further potential weakness on the dollar yen, heading back down towards the lower limit of this sideways range configuration that is still in place since 22nd of April 2025 swing low. Right, so this line here is the ascending range support that I drew from the low of 22nd of April. So next support level, first support level to watch will be 1468, 14660, which was this Tuesday minus swing low. A breakdown below it in first step could potentially see further downside to retest the 50-day moving average, confluencing with the minor swing low at 24th of July at 145.85. All right, below it potentially exposes the all-important ascending range support, medium-term support level at 144.50 now. Right. However, if price action instead of breaking downwards and it starts to squeeze up further above 148.75, then potentially we could now start to see a retest of that key 200-day moving average again at 149.50. Above it, potentially seek out 151.15, 151.30 next. All right, so that's for the dollar yen. Still maintaining my bearish bias in any bounces, using 148.75 as my short-term pivotal resistance. Intermediate resistance will be at 148.15. All right, so that sum up the major dollar pair intraday technical outlook. So let us now turn our attention to the major stock indices, starting with the Asia Pacific region, which is the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33 very clearly today is right now surpassing our first resistance zone, which I highlighted yesterday, and also the 20-day moving average now is bouncing very strongly above this 20-day moving average after being in the start consolidation range since Wednesday, yesterday. All right, so now this will be my support level already. Okay, This will be my first support level to watch. All right, so given that it's now clearing above the first resistance zone, now turns into a pullback first level support at 24,890, 24,790, then I will tighten my pivotal support level higher towards 24,600, which is the minor swing low or the low level, the intraday low of on Monday. All right, so and if you do the Fibo retracement of this ongoing impulsive up move since the start of last Friday, that also confluence very closely with the golden ratio of 61.8%. So using a slightly adjusted upward pivotal support level for today at 24,600, given that it's doing that bullish reversal right above the at the 20-day moving average, breaking above 24,890, 24,790. We will still continue to maintain our bullish bias on the Hong Kong 33. Next two resistance level to watch, 25,220, followed by 25,520 on a short-term basis, which is the minor swing high of 29th of July. However, a bearish breakdown below 24,600 will invalidate today's intraday bullish movement to seek out a extension of the minor corrective decline, again revisiting last Friday critical swing low area at 24,260, 24,140, which is also the 50-day moving average, and as well as the lower limit of this ongoing medium-term ascending channel that I drew from the low of 2nd of July. So i.e. still maintaining that bullish bias on the Hong Kong 33, representing the Hang Seng Index, using a tightened, slightly adjusted upward pivotal support at 24,600. Next up will be the Nikkei, Japan 225, representing the Nikkei 225. So today, Asia session, we do see a strong bounce over here. This strong bounce managed to clear above a minor range resistance that was formed early yesterday's European session over here, now turns into a pullback first support at 40,860. So using a adjusted pivotal support level for the Japan 225, which is today's early Asia session swing low at 40,645. Maintain our intraday bullish bias for the Japan 225 as it continue to play out this new impulsive up move up leg since the low of 1st of August. Next resistance level to watch 41,285, followed by 41,610 level. However, if we start to see a price action breakdown below 40,645, then that could negate today's bullish bias tone to seek out a much more deeper minor corrective pullback to retest the 20-day moving average, confluencing with the graphical intermediate support level at 40,300 level, and also very close to this turquoise green line here, which is the medium-term ascending trend line support that I drew from the low of 23rd of May. All right, so net overall, still maintaining our intraday bullish bias on the Japan 225 using a slightly adjusted upward pivotal support at 40,645 for today. Next up will be the European stock market using the Germany 30, which is the German DAX. All right, so the German 30 and German DAX going to trade in a tight sideways range within our so-called neutrality stance that we have yesterday, 23,990, 23,790. So we will continue to maintain our neutrality stance for today, but on the lookout for a potential bullish breakout over here, given that it continues to print a series of higher low. So if we start to see a bullish break above 23,990, potentially we could seek out the next intermediate resistance in first step at 24,210. However, if price action starts to break down below 23,790, then potentially we could revisit 23,600 again, maximum 23,390, which is the critical swing low of last Friday. So i.e. still maintaining a neutrality stance on the Germany 30 between 23,990, follow lower limit 23,790 for today. Next up will be the major US stock indices, starting with the US Wall Street 30. So yesterday, the US Wall Street 30 was the laggard, given the fact that its component stock doesn't has any AI business-related business operation. So it goes to trade sideways, but managed to help above our first support level at 40,100 level, okay, 44,010 level. Right exactly at the 1 a.m. mark Singapore time before it bounces. Since it hasn't broke above our first resistance zone, which is at 44,430 over here. Let me put it better. Okay, so this is 44,390. All right, 44,390. So since you haven't cleared above 44,390, we're so confluent with the to a 20-day moving average. I do not want to tighten my pivotal support to be so tight at 40,010. So I'll have 43,750 as my short-term pivotal support. That also confluence with the rising 50-day moving average. Still maintain my intraday bullish bias on the US Wall Street 30. Breaking above 44,390 may expose the next intermediate resistance level at 44,780, which is the minor congestion area of 29th of July and 31st of July. However, if we start to see a price breakdown below 43,750, today's intraday bullish bias will be negated to see a deeper slide to retest last Friday critical swing low area, which is the 1st of August swing low area at 43,475. Next up will be the S&P 500. So the S&P 500 managed to actually surpass our first resistance zone at 6,330, 6,348. So this will be the intermediate support level to watch for today. Okay, so given that it managed to break out above this pivot, this first resistance zone now turns into a first pullback support, I will be tightening my pivotal support slightly upwards to 6,305 / 6,290 over here. Maintain my bullish bias for the S&P 500 for it to retest the current all-time high area at 6,430, 6,450. All right, so if you look at the current price action, is just only a few percentage point away from the current all-time high. All right, so over here. Okay, it's just only 1.2% away from the current all-time high. So I would still maintain a bullish bias for today on the SPX using an adjusted pivotal support at 6,305, 6,290. However, if we start to see a price breakdown below 6,290, then today's intraday bullish bias will be negated to retest 6,263 level, which is the confluencing also the medium-term ascending channel support that is in place since 23rd of May low over here. All right, 23rd of May low. Okay, so IE in a nutshell, still maintaining my bullish bias with a slightly adjusted upward support on the SPX 500 at 6,305, 6,290. Lastly will be the Nasdaq 100. So the Nasdaq 100 also surpassed our first resistance level at 23,313. All right, so now with that surpassing of the 23,313, I will tighten my short-term pivotal support for today slightly higher to 23,130, 23,130 as my tighten adjusted short-term pivotal support that confluence with the 20-day moving average as well, maintaining our intraday bullish bias on the Nasdaq 100. Seeking out the next intermediate resistance, which is the current all-time high area at 23,710. Above 23,710, potentially seek out the next resistance at 24,020, which is being defined by a Fibo extension cluster level, and as well as the upper limit of this medium-term ascending channel that is in place since 23rd of May low. However, if we start to see a bearish breakdown below 23,130, today intraday bullish bias will be negated to see a further slide to retest the critical medium-term support of 22,900 level. So this 22,900 level also confluence with the ascending channel support that I drew from the low of 23rd of May. So IE still maintaining that bullish bias on the Nasdaq 100 at 23,130 next. All right, so for today, National Day special edition, we will cover the SGX 30, Singapore 30 index. All right, so this is the Singapore 30 CFD index. So before I start on the technical outlook, this Singapore 30 CFD index that we have in our platform is different from the Straits Times index. Okay, so the Singapore 30 index is actually based on the Smithsky Singapore MSCI futures contract. All right, so that's why the pricing you see is different, the level. So it's being quoted in the 100, rather the STI is in 4,000 range over here. So with this index over here, the Singapore 30 right now is also starts to actually inch up higher, continues to trade within a major ascending channel since August 2024 low. And right now, the short-term pivotal support will be at 422.20 level over here. So the first resistance level to watch out for will be this congestion area here. Okay, at 432.80, so above 432.80, seek out to retest the current high of 21st of July at 438.20 over here, followed by 442.60 from a medium-term perspective. Okay, this is a 4-hour chart. So this 4-hour chart over here, I'm looking for a 1 to 3 weeks time horizon. However, if we start to see a breakdown below 422.20, potentially there could be a choppy price consolidation to take shape again, but holding above the pivotal support zone at 417.20, 413.50, which confluence with the rising 50-day moving average. All right, so that's for the Singapore 30 CFD index, still continues to exhibit medium-term bullish element. All right, so with that, now let us now focus our attention to the commodities market, which is starting with gold XAU/USD over here. So gold XAU/USD managed to trade up higher. All right, so it managed to show a series of higher low since the Tuesday pullback taking shape, but continues to trade in the sideways, can't break up higher. That means there's no clear higher high over here. So with that, I do not want to tighten the pivotal support to be so tight at the 20-day moving average, and so confluence with the 50-day moving average now at 3,350 level. So I'll still use the 3,334 short-term pivotal support, maintain my bullish bias in any dips over here that may take shape on gold XAU/USD. Next resistance level to watch 3,402, followed by the 3,439, 3,447 area, which is the swing high area of 23rd of July and the swing high area of 16th of June. However, if price action starts to break down below 3,334, today's bullish bias view will be negated or invalidated to see another slide back down towards the lower limit of this sideways range at 3,310 level. Breaking down below it, seek out 3,264, which is the minor swing high area of 30th of June. Okay, so that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil, what we could see is that on the hourly basis, it broke down below the lower limit of that 65.95, 65.20, which is this sideways range configuration. Support now turns into a pullback resistance level. So now it's actually intending to actually do a kind of a retracement over here. So this retracement is also being worked out on the oversold level that is being made yesterday. So given that it has the bearish breakdown below 65.95, 65.20, we will flip to a intraday bearish bias for today using the 20-day and the 50-day moving average as a pivotal resistance level at 67.50, the intersection between them. So 67.40 and not 20, pardon me, 67.40 short-term pivotal resistance to hold any bounces that we're seeing right now. Flip to a bearish bias for West Texas crude oil. First support level to watch will be yesterday's minor swing low area, very close to 64.06, which is also the congestion area previously of 3rd of June and 6th of June. Now turns into a pullback support where price actually managed to survive right exactly at it yesterday, breaking down below 64.06, 64.06 exposes 62.50 next, which is the minor swing low area of 3rd of June and 4th of June. However, if we start to see a breakout above 67.40, then we will invalidate today's intraday bearish outlook and continue to see a choppy movement of West Texas oil, equally to float back up towards the upper limit of the range at 69.15, 68.50, maximum that swing high that was being seen on 31st of July at 67.20 next. All right, so that's for West Texas crude oil, and also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, as usual, let's have a quick look at the economic data. What are the key data to look out for today? So for today, what we have over here is for the European session, we could have a tier 2 data, which is Germany balance of trade, out at 2 p.m. Singapore time. So that could potentially influence a bit on the euro dollar, the euro crosses, and the Germany 30 index. And the all important one will be the Bank of England interest rate decision. So this Bank of England interest rate decision will be out at 7 p.m. Singapore time. So that will be market is really pricing in, almost pricing interest rate cut finally at 4.25%. At 4% to bring it down to 4%. So if you look at the interest rate decision previously of Bank of England over here, so Bank of England has been cutting rates. The last cut was on May, okay, May, that it actually hold rates, and right now it will actually market is now looking out for a cut again by 25 basis points to bring it down to 4%. But this cut will be in a rather divided vote cut over here. So based on what they are set to deliver a 5th interest rate cut over here, but however, the consensus is to still maintain a cautious approach to unwinding policy restriction given a recent spike up in inflation over here. So economists predict a 3-way split among the community over here, with the majority supporting a 1/4 point reduction, 2 backing a bigger 50 basis point cut, and the two others wanting no change in policy. So it's more like a dovish, not so dovish cut decision. Why? Because very likely they will mention this so-called cautious approach, because the CPI trend in UK is actually ticking up, slowly ticking upwards, away from that 2% target that they desired. So it will be more of a cautious interest rate cut guidance over here. So do keep a lookout that there will be a press conference by Governor Andrew Bartley half an hour later. That means at 7:30 p.m. Singapore time over here. So it's more of a cautious rate cut by Bank of England, and given this cautious stance that they may portray during the guardians coming out, especially at the press conference 7:30 p.m. Singapore time, that could actually potentially support further firmness on the sterling dollar itself over here, given that the inflation trend in UK continues to be stubbornly on an upward trend. Right, then thereafter, during the US session will be rather quiet, no key data to look out for other than two Federal Reserve officials speaking. Fed Bostic at 10 p.m. Singapore time, and 10:20 p.m. will be Fed Musalam over here. And going forward into the rest of the session will be a rather quiet one. And tomorrow Asia session at the start, very early at 7:30 a.m. 8th of August, we have key Japanese data out, which is a household spending, take it as retail spending. And we also have a Bank of Japan summary of opinions coming out at 7:50 a.m. So this summary of opinions is something like minutes, all right? It's something indirectly like a minutes, where Bank of Japan officials voice out their opinion in the previous monetary policy meeting. So something to look out for at 7:50 a.m. All right. So that sum up today's daily dose of market insights. So I'm Kelvin here signing off. So just a quick heads up, tomorrow there will be no daily dose, and daily dose will resume again on next Monday at 11th of August. So I wish you guys a very happy National Day, Majulah Singapura, and have a great weekend with your close ones. Kelvin here signing off, and we shall speak again on next Monday, 11th of August. Thank you.